expecting any major tax increases, thank heavens, from Finance Minister Enoch Godongwana later today.
Yeah, but his national budget is likely to spell out hikes in fuel levies as well as sin taxes. So eNCA's Devan Murugan takes a closer look.
It's the last thing South Africans want to hear from the Finance Minister, a hike in taxes. But the good news is that analysts agree neither personal income tax nor corporate tax will be hiked. That too is expected to be left untouched.
This year, we don't expect there to be any significant announcements from a personal income tax point of view. We certainly don't expect there to be rate increases. And what we might see is some moderate real tax relief, but probably nothing substantial at this point in time, given the significant challenges that is faced by the fiscus.
It also helps that there's been a surplus in tax revenue collection over the past year. Analysts say it could even be higher than the 83 billion rand surplus predicted in the medium-term budget, thanks to good-performing mining firms and higher than expected VAT collections and income tax last year. But what about relief from the current high food and fuel prices? Can the minister do anything on that front? The fuel price is at the mercy of the rand-dollar exchange rate and international oil prices. But there's also the issue of the general fuel levy at R3.94, then the road accident fund levy at R2.19. Many are asking for those levies to be scrapped altogether or reduced. But analysts say Finance Minister Enoch Godongwana is likely to raise those levies come the budget this week.
We didn't have any tax increases on the general fuel levy last year, similarly with the RAF levy. But given the importance of that and given the importance of the challenges that the fiscus faces in terms of, again, trying to consolidate the collections and so on, we do see them going back towards inflationary increases insofar as the general fuel levy is concerned, and similarly with regards to the RAF levy.
Food prices are now rising at the fastest pace since 2009, thanks in part to power cuts hitting food manufacturers and farms. The sector wants diesel rebates and tax incentives for alternative energy installations. Some have called for adding more food items like chicken to the zero VAT list. And then there's the incentive for solar installations.
It could take the form of a tax incentive. In other words, effectively, you get a tax break if you invest in solar. The difficulty with that is that the tax base in South Africa is very narrow. And what you want to do is you want as many people as possible to install solar in order to get as much relief in the electricity crisis as possible. So he could provide preferential finance for individuals to try and install solar at a cheaper rate, if you like. The difficulty with that is that no matter how preferential the finance is, if you don't have the money to install solar, it's not going to help you.
Smokers and drinkers won't escape the so-called sin taxes. PwC says tax on alcohol and cigarettes will see an increase this year as well. Devan Murugan, Johannesburg.